if we look back at 2022, we predicted it would be the sort of year of regulation, and that's certainly been the case. But at the same time, we've also seen a lot of industry developments as well, and some which I think have really sort of shifted the landscape when it comes to the policy focus that governments are taking really all across the world. I think there's a couple of points which mean that the events of 2022 are going to inform perhaps not what issues are on government's mind, but really the priority level and the speed at which they start to actually implement those. And I guess the sort of, the topic which is on everyone's mind right at the moment is this question of solvency. And there's a couple of implications that has for policymakers. One, of course, is the issue of sort of what sort of state are different players in the industry. And so government's looking to really understand, what sorts of liabilities and assets are there being held by individual firms, but also the connectedness between different firms. We've seen, of course, some of the biggest events of this year, really kind of in particular two bad actors, which have had, ricocheting effects across the industry. So really looking forward to seeing, how that plays out, and government's looking to make sure that, at the very least, those impacts don't bleed on to the end consumer. So in particular, looking at sort of the question of custody, how safeguarded are customers' funds, and are they segregated from the firm's own funds? And secondly, of course, is in the case of bankruptcy, making sure that in the event there is a failure, are customers' funds, in a place of priority when it comes to those bankruptcy proceedings. Yeah, so decentralization is really interesting when it comes to regulation, and so far the approach that government's taken has really been about putting this question of sort of decentralized finance, platforms, applications, products into a separate bucket and sort of keeping them aside for now. As we look into 2023, though, there are some work streams happening at the international level, which mean perhaps not immediately, but over the coming sort of 18, 24 months, I think that is going to change. And, the solutions there are going to be different. It's not just a matter of, unfortunately from a government perspective, sort of copy and pasting what we have for centralized finance or even TradFi over into the DeFi world. But the happy part of that story from a government perspective is that, while the sort of the core part of the industry has continued to really sort of grow over the last 12 months, we've also seen some of those solutions, some of those reg tech solutions, some of those understanding about, what's actually going on inside of, these liquidity pools, for example, the quality of the assets, what sort of exposure they might have to different parts of the industry or different types of assets. That technology is also growing. So, I'm relatively hopeful that as we look to the future and governments looking to think about, what can they do about DeFi? What are those points of contact and what are the main issues? What are the main risk points that they can actually leverage that technology that's also being developed at the moment to actually come to those solutions? But I think the reality is that everyone's very much got their hands full dealing with, thinking about the CeFi world. So I don't see a huge focus on the world of DeFi in the coming 12 months. I think we're probably looking a little bit further out. We'll see some sort of studies and perhaps early guidance come out towards the end of this year. But I think really in terms of actually implementing regulation, we're really looking into 2024 and beyond. This is an interesting point for the industry, and I think this is sort of an industry side to this as much as there is a sort of government and regulation side to this. There's no doubt that this, we are in sort of a trough right now as we head towards the end of 2022 versus sort of some of the peaks we've seen. But we also know it's actually in those troughs that companies really have the chance to focus on building. And I think we're already seeing that. We've seen that through the history of crypto. We've seen it through the history of tech innovation in general. And, I think there is still a strong interest on the investor side in actually building in this space and supporting businesses growing in this space. But there's just a lot more discernment about, what the sort of fundamentals are for any particular business model, and making sure that they're holding steady. So I think from an industry perspective, we are still seeing a lot of growth, but will the kind of move towards greater regulation actually harm that? It's it is, of course, there is always perhaps a tension, and people think it can necessarily be a trade-off, well, I can either protect consumers or I can allow innovation. And I don't think it's that black and white. I think there comes a point, and I think we're in the sort of, if I might call it, the traditional crypto space, where in order to actually, achieve the goals that the governments have around, having appropriate safeguards while allowing growth, they're not mutually exclusive things, but that there comes a point where having no regulation, or as we've seen in some countries, bans, this is just not an effective solution to achieve that policy goal of consumer safety. And so we have seen sort of regulations start to come into that. I think the reality is in sort of the kind of broader Web3 or kind of underlying tech blockchain space, we're still a little far away from sort of seeing regulations that look to tackle that broader space. And again, I think we'll have our hands more than full with the regulatory developments we expect to see for centralized CeFi services in 2023. Two things which are really quite exciting about the kind of broader Web3 space, and we see these already to some extent in sort of some isolated regional pockets, and one I'm thinking in particular is around the gaming space, which we know is extremely popular, sort of whether we play to earn type models, or even play to move to earn type models that we see popping up, particularly in Southeast Asia, and I think that's going to be a space of growing interest. And I think the other space is a sort of NFT space. People really think about NFTs today as being about this sort of, about art and culture. And I think that's a very strong use case, and I think we're going to see that grow. But I think the kind of broader implications of NFTs are the sort of asset tokenization. And that can be a digital asset, which is, often this sort of digital art space that we've been focused on a lot so far, but also the broader sort of tokenization of what I might call, physical world assets, and all the opportunities that opens up in terms of ownership, in terms of trading, once you've managed to make that connection, that between the sort of the physical world asset and the digital twin. I think the technology there is really improving, and the interest level about what that can sort of mean for assets in terms of liquidity and so forth is really opening up. And I think those are two really interesting areas that we can expect to see more being built in as we head into 2023. I think the reality is, a lot of the innovation so far has happened in the sort of financial services part, or, more akin to that part of traditional industry, perhaps, than we have seen in other areas of growth. Will 2023 kind of be the breakthrough year for blockchain more generally? I think that there are growing use cases there, and I think, though, that this is a sort of a case where, the industry more generally is building towards a tipping point where sort of both awareness of the technology and the sort of investments that need to go in to have those kind of, 10x sort of, improvements that make the investments in this space actually worthwhile. And I think what's been happening, up until now, and I think it will continue through 2023, I think we're not probably quite there yet, is that kind of understanding, particularly in firms in more traditional sectors, that kind of C-suite level understanding of what the technology is useful for, whether it be sort of in the areas of supply chains or healthcare, just to name two, but really understanding what the value is, and particularly for new businesses building in that space, not just legacy businesses that are converting existing tech into new tech. I think that level of understanding, we've seen it grow significantly in the last probably 18 months or so. But there is probably some way to go for that move from sort of theory into practice for broader adoption.